Good morning, Steve Fried with the Morning Grain Comments. Well, today is Juneteenth. It's try to be a unified day for everyone in this country, so I hope everybody reflects on that and stays safe. As far as our grain markets are concerned, we're a little bit higher overnight. Stocks are higher, crude's higher. I think that, first of all, there is some hope that these talks between U.S. and China may bear fruit as far as them coming in and buying U.S. grains. Some people feel that after July meetings that they will begin to buy U.S. grains, and they have been recently a steady buyer of U.S. soybeans, so that could offer some support in the market. I think the biggest thing overnight was the fact that the weather models have reduced the rainfall for the U.S. Midwest in the second week. We're still going to get these rains that are moving across the Midwest over the next 7 days. And I think that's going to help overall crop conditions because many parts of, especially the Western Corn Belt, is in need of a good rain. And so we'll have to see in the first week in July if the ridge comes back and how long it stays. This is not 2012 or some of the drought years that we saw in the 1980s, but we could go back to more of an old-fashioned summer where we have some warm and dry conditions following breakdown of the ridge and get some rains across the Midwest. The key could be the tropical patterns this summer. If we have some tropical storms that come into the southeast U.S., it could limit the amount of rain that we see in the plains and the Western Corn Belt. If we have a few that come into the Gulf, that could provide some moisture to the Midwest, but again, we'll be watching closely the Northwest Corn Belt and maybe the Northern Plains to see if they're shortchanged. So it's a weather market. It usually is as we get closer to the 4th of July, and so the markets are going to have to be watching that pretty closely, especially when we consider the funds are near record short corn futures, big shorts in meal, and have turned short wheat. And they still have a small long position in the beans. Technically speaking, the beans traded above some resistance that we haven't traded since January. Corn is also in a gradual uptick and trading above the 20 and 50-day moving averages. And the wheat market continues to be marred near season lows. So I think that the big thing right now is, number one, will these funds cover some of the shorts? And number two, will the consumer come in and start buying some of their needs, especially in the corn market? In Europe, farmers are reluctant sellers of wheat as they debate over the size and quality of their crop. The problem is that the importers, especially North Africa, may be limited in what they can buy because of the virus impact on their economy. Hard wheat and soft wheat futures are under pressure because of the U.S. harvest, but the spring wheat has actually started to gain, and some people think that is because China is looking to buy U.S. spring wheat. Vegetable oil market, soybean futures sharply higher overnight because of higher Asian markets and talk that China and India veg oil supplies may be tightening. So a little bit of an uptick. We've got to watch the weather. We've got to watch any news on the virus and the economy, and we've got to watch any news on China and whether or not they're going to come in and buy U.S. ag goods based on the Phase 1 deal. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and have a very happy Father's Day.